Take us through Disney. What were the highlights for you?
Well, I think the highlights were first tax. We knew that Disney was going to be really one of the biggest beneficiaries of tax, and the benefits are coming in a little bit better than we had thought. And that takes the stock a 20% lift to EPS from lower tax rates, takes a stock that had traded, at something like a premium to the market to a discount to the market. So it really changes the valuation argument, gives them a lot of free cash flow to buy back equity, pay dividends, invest in their business. So that was really positive. I think the other thing that's great about Disney right now is their parks business is just on fire with great growth in the quarter and then great kind of forward view, we think, into the March quarter. That's wonderful. I think it was a little bit light on the consumer product licensing front, as we heard out of Hasbro, but on balance, I think it was a good story for Disney and a great story for Fox, which is being bought by Disney, and we think it's kind of a cheaper play on Disney, and we recommend Fox.
So Barton, we're putting up a graphic right now that illustrates some of what you just said. As you said, parks and resorts were up 21% year over year in operating income. They were down a bit in consumer products, but the one that jumped out at me was media networks, which was down 12% year over year. And as I understand it, the cable part was basically flat or up just a little bit. The broadcast was down 25%. That's a whopping number. What's going on there?
Right. Well, that's just lumpy, right? I mean, they sell TV shows and broadcast and syndication, and they had a headwind from timing of a show sale that drove that number down. It'll be up in later periods as they, sell content in some, other time slots. That was the biggest driver. But there is clearly ratings pressure that's driving down ad revenues. ESPN had some tough comps to timing of college bowl games, which will help them a little bit more in the March quarter. That's not a normalized trend. That's really more a timing-driven kind of skew. But the TV network business is clearly a source of concern. And I think that Disney's investing in their over-the-top initiatives to try and offset that, mitigate it. And I think the jury is still out on whether that's going to be fully successful, which is one of my cautions on Disney, why I'm not recommending it and preferring to get a cheaper play through Fox.